What's up, stock traders, and welcome back to another video. Today we'll be talking about Nvidia's earnings tomorrow and the AI hype, whether or not it is overdone or has more room to run. And we're going to talk about some healthcare stocks. I've had a lot of requests with this, and I'm going to be talking about a couple stocks that I like. Of course, we'll be talking about Robinhood and Coinbase. Robinhood, of course, one of my favorite long-term stocks. And finally, I'm going to be talking about one stock that I'm selling here today. So in this video, we're going to be going through a whole bunch of stocks. All I ask as we get started is that you hit the thumbs up button and subscribe to the channel. Let's jump in. So first up on our watch list here today is to take a look at Nvidia Corporation, which has been completely a monster here in this bounce back that we've seen since the April lows. In fact, from those April lows, Nvidia has risen. And by the way, this is a ginormous company. This is not a small company. It is doubled, up $92 per share from its low of 87 bucks. This stock is up 105%. It's an absolute monster of a wealth generating machine here for a lot of the shareholders. And I do own shares of Nvidia. So how am I feeling about this upcoming Wednesday earnings report? Well, let's talk about it. Well, in the last few days, we've seen a little bit of the hype come back into Nvidia, and this is pre-earnings. What's going on? Nvidia's new robot brain goes on sale for $3,500 as the company targets robotics for growth. Nvidia announced on Monday that its latest robotics chip module, the Jetson AGX Thor, is now on sale for $3,500 as a developer kit. The company calls the chip a robot brain, and the first kits ship next month. And Nvidia CEO Jensen Huang has said robotics is the company's largest growth opportunity outside of artificial intelligence. And so with the stock trading up ahead of the big earnings report, this is actually not new. A lot of times the Nvidia earnings are actually something that people buy the rumor and have historically sold the news. And let's just take a look at some of the recent historical performances post the earnings announcements for Nvidia. And just for context here, taking a look at our earnings report tracker, for the last 4 reported earnings, Nvidia has beaten their expectations handily by 8%, by 5.25%, 8.5%, 5.6%. The earnings surprise has been very positive for the stock in the last 4 quarters. But how is the share price done post earnings? Well, you can see at this earnings report, we did get a little bit of a move up that quickly erased. In the earnings report before that, where they did beat, the stock traded lower for the next week. Before that, again, the stock sold off post earnings. And again, before that, the stock sold off post earnings. Of course, there are examples of when the stock has risen post earnings, but I think this gets to a thing that I wanted to discuss about the Nvidia earnings coming up tomorrow. And that is expectations are high. People think this company is going to do remarkable things in the future, so the stock is priced expensively. Now, I too am a shareholder of Nvidia, but I wanted to go through a trade that I put on for the earnings cycle that we are seeing here. So I own 500 shares of Nvidia, and I am sitting on a really nice gain on the stock. I was able to buy the stock during the sell-off this year, and I'm sitting on an average gain of around 61.4% on the stock. So I've done really well, but I've actually chosen to write a covered call on my stock position ahead of the earnings report. Now, what is a covered call? A covered call is an options trading strategy where you own shares of a stock and sell call options on those shares, giving the buyer of that option the right to buy your stock at a specific price, aka the strike price, by a certain date. In exchange for doing this, you receive an immediate payment or premium for selling the option, generating income from your existing stock holdings. Going forward, I am definitely going to read this more often because that does so much better than me trying to explain it on the fly. And so going into this earnings report, what have I basically done? Well, I own 500 shares of Nvidia, but I've also sold a $210 strike price call out of the money, essentially saying that if the stock price were to explode higher, then I would get called away from my shares, or essentially I would be required to sell the shares at $210 a share. In exchange for doing this, however, I collected $1.64 per share. So that number times 500 comes out to equal a premium collected of $820. What that means is that if the stock price stays where it's at, moves lower, or simply moves up to this point but does not exceed that, this will be a very net positive max profit of $820 for my trade. If the stock prices rises significantly above, I will have just given up my upside past $210 per share, effectively allowing me to pocket $820 no matter what happens in exchange for the potential of giving up upside. There is no risk to selling a covered call in the sense that the call itself, you're just pocketing that money and you are hedged because you own the shares. What's the downside? The downside is that if Nvidia went up 20%, I would miss out on a big chunk of those gains. But again, no directly negative result to my account due to selling that covered call. Hence why I love doing this on stocks, even the ones that I love that I think have run a little bit too hot. I do think that Nvidia is a great company. It's going to do amazing things in the years to come, but I do think we have room across the whole market to correct a little bit, to pull back. We've had a solid return. I mentioned opening up on this Nvidia topic. Stock has done phenomenal since those lows. If we take a look from the low to high, we've got a move of 110%, right? The stock has done phenomenal. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in Nvidia shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. While we're on the topic of high-flying stocks, let's talk about one of my favorite stocks in the market that I also think is overbought, Robinhood Markets. Ticker symbol HOOD. You want to talk about a stock that has done really well since that sell-off? Robinhood, even with this recent move lower, is up an astounding 250%. At the highs, the stock was up almost 300%. And because I was able to buy the dip back in April, I got the stock price around $40.21, which is a phenomenal buy. And gosh, do I wish I had more stock picks like this. This is definitely by far my best single trade or stock purchase of the year for sure. But I've also taken the opportunity here to sell some calls against the stock price. Which, why would I be doing that? Well, I love the stock and I want to stay in it, but I also want to collect some income on it because I do think in the short run it's become a little overextended. I think these stocks have plenty of room. I would not be surprised if Robinhood were to pull back into, the 80s, into the 70s. Again, stock that I want to keep for the long term, but in the meantime, what I've done to cover my downside a little bit is sell some calls. And so you can see I'm up $5,000 on these calls that I've sold. I sold the $98 strike price call, which by the way, that call is in the money. So I'm actually looking to potentially roll this out in strike price higher and at expiration for those who are familiar with options. But essentially, I still think the stock has plenty of room to run, but I do think the broader market has room to correct and pull back a little bit. And so I've sold calls against a lot of my positions. I mean, just take a look at my portfolio and you'll see I have a ton of covered calls on things like Google, Lululemon, American Express, Express, Salesforce, Amazon, Tesla. I have a very wide range of positions that I have covered calls on right now. And here's my Tesla position, which is a very large position in my portfolio that I've also sold the 355 and 400 calls. I have 2 contracts short calls on 355 and 2 contracts short calls on 400. So when we look at things like Robinhood, I'm able to sort of collect income even if the stock trades sideways. But I do think that the bigger picture for Robinhood is we've had a phenomenal run. I would not be surprised if we had a consolidation or even a pullback in coming months. And I'm looking for again, a bigger, longer term move to the upside on this stock. But I do think that the market itself is a little bit hot and due for some pullback. Robinhood stock has also significantly beaten their expectations in terms of their earnings report tracker. They had phenomenal earnings here the last few quarters. And this is, again, giving me more confidence why I like the shares long term, but do think they've gotten a little bit overbought in the short term. And we recently added Hood and several other stocks to the stock box, which allows us to track a huge amount of financial data on companies, as well as something really exciting that I've been talking about on the channel, which is the brand new top stocks scoring algorithm. Now, all this does is it essentially looks at a collection of technical readings, sentiment readings, and financial readings for companies. We're looking at what analysts are thinking about a particular stock. We're looking at institutional activity, whether they're buying or selling. We're looking at momentum and overextension. We're looking at PE ratios, both forward and trailing 12-month. And we do have more financial readings coming. They're just finalizing here in the back office where we're developing this software. If you don't have a copy of the stock box and you want to start scanning for more stocks, check it out down below in the description. We do offer a trial so that if you want to check out the tool and see what it's all about, you can do so there. So check out the stock box down below in the description if you're interested in starting to use a screener that actually combines both technicals, financial readings, sentiment, and much more to help find better stocks today. While we're looking at the top stocks page, I'll show you a couple things that actually have crossed my radar here, and that's the healthcare world. And what I can actually do here is, because I'm interested in healthcare in general, I can actually look for healthcare stocks by themselves. And you'll see a couple of the top of the list here that I am watching based on, again, the top stocks algorithm. We've got Pfizer and we've got BIIB, JNJ, REGN. I want to take a look at some of these stocks and see if there's some potential to rotate into what I believe could be a sector that holds up well if we do see a broader market pullback. Let's take a look at Pfizer. Here's a look at Pfizer on a daily chart zoomed way out. You can see the stock was, of course, all the rave during the COVID pandemic and has just been a slowly dying stock since then. I shouldn't say slowly, it's just been a dying stock. But now looks like it may actually be in a potential reversal format. We do have on the stock some higher lows forming, and we've tested some key resistance here around $26 per share and pulled back. I do actually think that there is an opportunity, if we get a pullback into this 20-period moving average, to possibly buy the stock at a dip. So what I may choose to do is I may short some puts on this one or just buy some shares if we do see price pull back. But Pfizer is looking good on my radar here, again, based on the top stocks. It's getting one of the highest scores here with a +7 score. That's basically telling me that a lot of our financial readings, sentiment data, and the technical data generally approve of kind of some potential upside for the stock. So I like Pfizer. I think it's one that I may look to add to the portfolio for a possible trade. Another one is BIIB, getting a score of 6. Let's take a look. From a technical basis, I really like this stock chart. We did get a significant breakout here across this area of support around 136. We're now testing that area, and we do seem to be forming some, again, higher lows on the stock. Actually, let me move this over so you can see it a little bit better. We do have kind of that downward momentum. Stock has gotten really sold hard here and now seems to be bottoming out. I like the stock quite a bit, and I think there is more upside on this BIIB, that's Biogen. Johnson & Johnson is another, of course, notable household name in the healthcare world. I would love to see the stock price retrace a little bit further, maybe a move down to 170, 165. This range looks really attractive for a possible buying the dip opportunity. If we draw some fibs on this move here from the low to the high, you can see that 38.2% retracement comes in around $169 per share. So I am looking for a possible pullback into that supportive range where I do think we could get continuation. So this is on the watch list as well. I had a request from an audience member who asked for me to do BA, Boeing Company. Now, if you do have a chart request that you would like to ask me to do, feel free to drop it in the comments and I may cover it in a future video. So I'm looking at Boeing here, which has got some nice price momentum here. You can see we've definitely got a stock moving higher. Technicals look pretty good for Boeing here. However, my concern with industrials in general is that with what I believe to be a slowing economy, rising inflation, slowing jobs, I do think that the risk to reward to the stock does not look super attractive at current levels. Again, if you think that the economy is going to do really well from here, perhaps this stock is one that you would want to buy. But this is a pretty pure play on the economy. If you think about, flights and demand for flights, of course, Boeing in the business of building airplanes, aerospace in general, that sort of thing. And I just don't have a huge conviction in that area at this time. In fact, I own some shares of Delta that I'm looking to actually sell out of. So when it comes to the airline world, I'm a little bit cautious, and I'll show you why. Pulling up the macro screener within the stock box, what we can see here is that we have a pretty bearish outlook on stocks, generally speaking, at this time. The reason for this is that we have some of our economic data that is coming in really soft, generating a bearish reading here for stocks. Additionally, with that, we have high inflation, right? The producer price index number came in hot. The PCE number, which we get fresh data for that coming in at the end of this week on Friday. But then we also had CPI, which was a little bit better than expected, but core CPI was hot. So overall, the condition for buying stocks to me puts me in more of a defensive stance, which means I'm more interested in companies that are in the energy world. I'm more interested in healthcare stocks, things that could be arguably a little bit more defensive, consumer staples, as opposed to being out there buying, tech and industrials and things that generally require or do better, I should say, outperform during a good, strong economy environment. I think that we may be we may be seeing the economy continue to contract and slow down a little bit. Doesn't necessarily mean we need to enter into a giant recession, but the risk to reward on a stock like Boeing or Delta or Airbnb, any of these travel stocks or airline related stocks, I just don't love them as much. Now, I did actually take a trade on Delta Airlines. If I switch over to ticker symbol DAL, you can actually see that I sold calls, and these calls are likely to call me away from my position. So I shorted calls around the $55 strike price, and with the stock now trading well above that, I will likely get called away for a profit on my Delta Airlines position, and I'm happy to do that. I'm going to basically sell the shares essentially with about just over 10 days to go, or somewhere around 10 days to go on these call options that I sold. Unless we get a sharp sell-off on Delta Airlines, it is likely that I'm going to get called away from the shares and essentially be taking a profit on my trade on the long side, which was a purchase that I made around $37 per share. So puts me right down towards the lows of April. I believed that the freak out in markets was a little overdone. And now I think that the bounce back in markets has become a little bit overdone too. And finally, we'll get into a stock that I will be selling today, which is Home Depot. Now this stock I've done really well on. I bought 80 shares at around $346 per share. The stock has done really well. Why has it done well? Well, because the expectations for rate cuts have increased. And Home Depot does a lot of, obviously, home renovations and all sorts of different, tools and anything that would be involved in home repair or renovations, which happen typically in a good economy with lower interest rates, where home buying and home, movement through the economy. Right now, we've been in a situation where young people can't afford to buy homes with high interest rates and high prices. But if we do see interest rates come down, there is an expectation that more people will then go and sell their home or buy a new home or buy their first home. And so that combination makes Home Depot look attractive. So why on earth would I be selling my shares here today? Well, I'll tell you why. It's because I do think that, yes, we may be getting some interest rate cuts, but my concern is that the economy may be slowing, which may reduce the demand for house buying anyways, right? Even if we do see interest rates kind of free up the housing market a little bit, there has been a lot of pent-up demand for home buying. But if we continue to see labor data materially weaken, my concern is that, if people don't have jobs or that starts to become a bigger theme, that could be concerning. So long story short, I've done really well with the share price. I am going to be locking in around a 17% gain on the stock, and actually have an options trade on it too. So I actually have two trades open on Home Depot. I am long the shares, and I'm also short some calls at $400 per share. So what I'm actually going to be doing here today is I'm going to be closing out this position through a market order. And so we are essentially going to be selling this off, raising cash in the portfolio. And you can see I am out of the shares for a profit of $4,800 on Home Depot. And this does a couple things for me. Number one, it closes out a trade that I really liked at the time of taking the trade. I thought that the economy was going to hold up better than people thought during the tariff fears, but now people, in my opinion, have kind of swung the other way, where people are very euphoric about rate cuts are coming, it's going to be great, and I'm just going to lock in some gains on this stock because it's not necessarily a forever stock for me. It was a trade, and so I'm taking profits on my trade. Essentially, the risk to reward of staying long a company like Home Depot is just not quite there for me anymore, and so I'm going to go ahead and just lock that in, and I'm going to actually keep the short call position open because Home Depot is a stock that I now think is actually a little bit expensive. In fact, if we go back to our top stocks page and reverse the scores, check this out. Home Depot is actually getting one of our lowest scores on the stock box at this time, getting some overextension to the upside readings here recently, and a very expensive valuation relative to its own history. So I'm selling the shares, and I'm actually going to keep that short call on just to see what happens there as a bit of a hedge in the portfolio, as I still own a lot of stocks on the long side. But this is in line with my theme here recently, which has been selling out of positions that I'm not necessarily in forever on, and rather just raising cash for what I think could be an eventual dip in the markets coming here soon. Now, again, I'm not going to try and time that or short the market per se, but I'm going to raise cash and be defensive in my posturing for what I believe could be a pullback in markets coming sooner rather than later. If you enjoyed my video, make sure to hit the thumbs up button and subscribe. I know this was kind of a long one, but I had a lot of stuff on the stock watch list to get through, and so I really appreciate you taking some time to watch my video. If you enjoyed it, make sure to hit that thumbs up button, subscribe, all that good stuff, and we'll see you in the next one. Thanks for watching.